John, good to have you with us today.
Thanks so much for having me, Henri.
John, I want to talk about various topics, including now we're a couple of weeks post-elections. Donald Trump is coming into office soon. And obviously there's a whole change in what's happening in the crypto space on the regulatory side. How quickly do you expect to see regulatory change, especially when it comes to crypto?
Well, Henri, it's difficult to overstate what a massive sea change this is. If these agencies are led by human beings set tone from the top. And without question, for the last 5 to 7 years, not just crypto, but lots of areas of finance, alternative investments, hedge funds, and other areas have felt effectively strangled by the tone from the top coming out of these agencies. So even before those shifts happen formally, we've seen tremendous price action that indicates the market is expecting a price discovery scenario where we have to understand how good things will be. And we've seen some volatility at these tops, but clearly, given the massive run, there is a large expectation that this change will happen quickly and it will happen very decisively.
So, talking about the speed of change, one of the big problems we've seen in the crypto community is being unbanked, right? For a lot of crypto companies have been trying to get the bank account. It's been obviously very difficult. Many bank accounts were being closed. What are you seeing in practice on the ground on this topic? And do you expect the attitude of banks towards crypto companies to change over the coming months?
I think so. I don't like predictions because they're challenging. But so you'll hear reference now to what's called Operation Choke Point 2.0. So just a brief history lesson. Operation Choke Point, the original, and this is all a matter of public record, was an informal policy around 2013 to 2017, where certain agencies and certain individuals within government, many of whom were unelected individuals, decided that they didn't like a laundry list of industries. And they wanted those industries to not grow or even just not exist in the U.S. The problem was that the good people in Congress who make our laws had, at that point, decided to not make those industries illegal. So these individuals and these agencies took it upon themselves, and again, this is all a matter of public record, to create sort of a whisper campaign to not directly to those industries, not directly telling them, get out of our country, stop growing, stop hiring, but they found the pressure point, which is banking, which is the lifeblood of most corporate entities. And so they literally called and whispered and said, don't work with these legal industries, as opposed to doing the work to find the bad actors within those industries. So that's, again, all a matter of public record. There were lawsuits, there were settlements, agencies had to official formal apologies. There were training programs developed to not discriminate against legal industries. And so there's a precedent of this. And there's a lot of talk right now, and we're seeing, if not lawsuits, we're seeing what are called FOIA requests, Freedom of Information requests by various companies, and we're unearthing similar type of whisper campaigns. If you've been in crypto for the last 5 to 7 years, you don't need this evidence. You know it's been real. And so we talk about unbanking or debanking. But the bigger problem, quite frankly, was the lack of growth within these sectors for banking. So your typical, let's say, small hedge fund, you start off, not every bank will work with you. That's fair. Not every bank works with small clients, but there's usually lots of banks that want to create the next generation of big client. And then as you grow, the functions available to you tend to grow with you. That was being throttled. And so vibrant industries that were looking to grow, expand, hire, contribute to GDP, they just simply weren't allowed to. And again, this is not because they themselves were bad actors. And not because the banks, this is very important, it's not because the banks determined they didn't want that business. It's because they were being told out of jurisdiction, out of the law, to not work with these legal companies.
And that's obviously a big problem because, ironically, although you're in the crypto space, not having banking rails is a major problem from that perspective.
Yeah.
I mean, when it comes from a change perspective now, there's also the related problem where a lot of global crypto firms do not want to deal with U.S. clients. If you're a crypto exchange, for example, and if you're a U.S. customer, it's always a problem. Do you believe that with the changes going on, that attitude from global crypto firms may change as well, and that U.S. customers may be potentially welcomed again?
I mean, sure, I have to imagine it will, because they're not just arbitrarily choosing not to work with you. They're not saying we don't like U.S. citizens. They're saying we're concerned that the formal and informal policies of the U.S. government will make our lives difficult, and no one wants to anger the U.S. regulators and the U.S. government. So I have to imagine there'll be a carryover effect if the agencies follow the rule of law and don't exert undue pressure on legal industries. I have to imagine that non-U.S. companies, I don't see any reason why they wouldn't at this point, lessen their requirements around not serving U.S. investors.
Based on all this, right, if you think about the future, let's say next to 2-3 years, the reality is the last couple of years, the U.S. was not a great place to run a crypto business. Do you believe there could be a 180 where the U.S. suddenly becomes the hub for crypto, where every crypto company, every crypto entrepreneur wants to set up there, and we see complete change of landscape on that from that angle?
I mean, look, again, it's hard to overstate the optimism. Yeah. So is it possible? Sure. Let's just say this: it's certainly going to be a heck of a lot better. Now, I think look, there's other reasons besides regulatory permissiveness to go to a jurisdiction, right? There's the UAE is incredible from a cultural living perspective, from a tax perspective. For many people, it's more advantageous to be here than say go to the U.S. So I don't think you'll see this incredible reversal and this giant sucking sound and everything moving back into the U.S. I think you'll see balance, which is what we were lacking for the last 5 to 7 years. And by the way, I think that's extremely good for places like the UAE, because I think to be alone in this world as the sole sort of sane voice and a place fostering innovation around a particular type of technology, it's a lonely place to be. And so I think as go the US, as go the UAE, I've been coming here for 25 years. I see it as a sister city in some ways to my beloved city of New York. And so when we're doing well, the UAE will do well. We have a lot of trade. We have a lot of, especially for assets like crypto that are fungible across jurisdictions. Building liquidity across friendly jurisdictions is only good for industry. It's good for innovation. It's good for jobs, and it's good for liquidity in the markets.
And to finish it off, as we're heading into 2025, what's the one thing that's exciting you about the crypto space in the year ahead?
I think it's the optimism, to be perfectly frank. I mean, I think I was concerned about bright young people choosing to use their talents in other industries because they felt that they would not be able to achieve the capabilities due to unnecessary regulatory burden. And it's wonderful that these bright young people are choosing to come back into this industry and lend their talents.
Balance and optimism, wise words for 2025. That was John Dagostino, the head of strategy at Coinbase Institutional. Thanks, John, for being with us today.
Thanks, Henri.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.